work for Motilal Asset Management Company. It's basically largely been a portfolio management house. We only manage equities. About 4,600 crores of assets we manage purely into equities. As a company, we don't do anything other than managing equity. Last 30 years, Motilal Oswal has been into equity broking and research. So about 600 global institutions is what Motilal Oswal advises. And since 2003 onwards, apart from just advising, we also started managing money for high net worth individuals. So from 2003 onwards, we've been running portfolio management, and last year after I joined, we started creating a range of open-ended equity funds. So, like I mentioned, as a company, we are a specialist. We manage only 2 PMS portfolios and 3 open-ended funds. That's it. And we don't do anything in fixed income or any other areas. So, what I'm going to talk to you about is on equities. I've been to a lot of conferences where I meet a lot of financial planners. A couple of things that I have observed. One very important thing is that obviously you follow a process which is client-centric, and hence you arrive at all the decisions from the client side, which is to understand his goals, his requirements, his risk tolerance, his return expectations, and the entire product bit comes at the end. But eventually in that entire process, what ends up happening is equity is the asset class which is expected to meet most of the long-term goals. And from that perspective, understanding of equity becomes very important, because you can follow the entire process and finally get into asset allocation. But when you get to asset allocation, convincing people about why they should invest in equity and why they should tolerate the volatility of equity, I think that becomes a very big challenge. Because a lot of times people have this, उन लोगों को लगता है कि पूरा प्रोसेस आपने फॉलो कर लिया लेकिन इक्विटी में पैसा लगाने पे that is gone. So I think that few things that I will share with you which will help you to give your investors. I assume that you have a lot of this understanding already, but I would like to share a few things with you which will help you give your investors a better understanding of why they should be investing in equity and what is the power of investing in equity which they should be harnessing from their portfolios. So the first thing, what I've observed, the first thing which comes across to me most striking is that any investor, and pardon me saying this, most advisors also, they don't understand inflation. The reason why I'm saying this is because people think of inflation as per what the rate RBI speaks about. What is the rate of inflation today? 8% WPI, 6% CPI, or whatever numbers that people keep rattling out. In reality, that inflation which we are monitoring is of no use for your financial plan. It is very, very relevant if you want to take a call on interest rates. It's very relevant if you want to decide which way the 10-year bond is going. Let me assure you the inflation which you are tracking has no relevance for financial planning. Okay? So let's understand, or let's look at how a normal investor needs to understand inflation. So how investors should define inflation? I'm just giving you one simple example. If I ask you this question, that which car can you buy with 8 lakh rupees today? Can you visualize something? Okay. So this is what you can buy for 8 lakh rupees. Okay. Now let's take an example that I come to you and I say, आप मेरे दोस्त हो या जो भी है, आप मुझे पैसे की ज़रूरत है. Okay, so you had 8 lakh rupees with you, you would have bought that Honda Amaze. And I as a friend come and tell you that I'm desperately in need of money. Can you lend me money? So I borrow 8 lakhs from you for a period of 3 years. Okay? I come back after 3 years and I return 8 lakhs to you. Because you're a friend, it's a friendly loan that I've taken from you. I come back to you and I return your 8 lakhs after 3 years. Which car will you be able to buy? Same car? So is this fair? Is it fair? Okay, so it's not fair. So I will return to you 8 lakhs but with interest. Is it okay? Which car will you be able to buy now? Are you happy with this? No. Good enough? No. Why? ठीक है ना, पहले भी 8 lakhs ले सकते. जो मिल रहा था वही मिल रहा है. What is the problem?
Standardization has not gone up.
What has not gone up?
Standardization of living, or standard of living has not gone up with the same. What I was owing 3 years back, today again I am owing the same thing.
Yeah. So after आप इतना अच्छा बढ़िया जवाब दिया, आप इन्वेस्टर को इन्फ्लेशन ऐसे समझाते हो?
Yes, sir.
So after sacrificing what you could have owned 3 years back, obviously you wish for a better standard of living. So what would you rather have? What should you have actually? Correct? Is this good enough? Please try and understand the people that you deal with. They have dreams and aspirations also. Right? So this is actually what people want. Everybody wants this. It's very nice to say कि जितनी चादर है उतना पैर फैलाओ, वो सब बहुत अच्छा है. But India as a country has changed. It has changed dramatically. All the people that I meet with, all the people that I deal with, all the people who were driving a Hyundai Accent 5 years back are driving an Audi A4 today. You see around yourself, that is what you actually realize. All these cars are no longer imported. They are not completely knocked down kits. They are all made in India now. What is the reason? So the most important thing to keep in mind is, why are people investing? What is the definition of investing? It was changed by Warren Buffett many years back, but India पहुंचा नहीं है अभी तक. The definition of investing is foregoing consumption now in order to have the ability to consume more at a later date. It is not for compensating inflation. Investing is not to compensate you for inflation. Investing is much more than that. You should be compensated for inflation, and not only that, your standard of living has to continuously keep improving. That is the most important thing. People have dreams and aspirations which need to be met. You are not investing so that you can keep your standard of living intact. Your standard of living has to actually improve. Also keep one more thing in mind. You have to see, मेरे पास इसका जवाब नहीं है, but आप सोच लेना कभी. Warren Buffett doesn't do financial planning and asset allocation. Think of it. I don't have an answer for it, but think of it. So few questions you must ask your investor. First thing, when you put money in the bank pays you 8%. But when you go to borrow from the bank charges you what? 12, 13, 14. So should you be a depositor with the bank or should you be shareholder of the bank?
Shareholder.
But do you know what most of our country does?
They are owner of the FDs.
They are owner of the FDs.
60,000.
People who own FDs will never be capable to own anything. So it's मतलब मैं English से play around कर रहा हूँ, आप पूरा सही बोल रहे हो. But I'll tell you something interesting in terms of statistics. Our stock market capitalization is 100 lakh crores. You must have read it in the newspaper. Okay. Out of 100 lakh crores, 55 lakh crores is owned by promoters of companies. So that actually is not a part of the stock market. That only represents their controlling stake or their ownership of the business. So 55% is owned by promoters. 25% is owned by FIIs. Another 10% is owned by what we call domestic institutions, like government institutions, insurance companies, LIC, those kind of entities. But only 10% is owned by retail individual investors. What in stock market parlance is called non-promoter, non-institutional holding of equities, where people are holding shares in their demat accounts, is only 10% of our market. So इतना सुबह से शाम तक लोग CNBC बजाते हैं ना, कुछ नहीं है. It's only 10 lakh crores out of 100 lakh crores. Okay, that is one thing. And the second interesting thing is that a particular statement I'll make, and you tell me whether you understand it or not. In the full market, in 100 lakh crores, retail holding is 10%. But if I were to ask you, what is retail holding in Nifty? Can anybody tell me? Nifty is, see, the full market of 100 lakh crores is virtually about 7,000 companies. But Nifty is just 50 companies. The best 50 companies is Nifty 50. So in 100 lakh crores, 50 lakh crores is the market cap of Nifty itself. And 5 lakh crores is TCS itself. Okay? So now you tell me that out of 100 lakh crores, if retail holding is 10%, what is your guess? In Nifty, what is retail holding?
0.02.
2%.
Half percent. 0.2%.
It's 4%.
4%.
It's 4%. And FII holding in Nifty is just under 30%. So 29 or something. So now if I make a statement that as the quality of companies improves, FII holding goes up and retail holding down. And as you go down on the quality of companies, FI holding goes down and retail holding actually goes up. Okay, so few things. One, we don't own enough equity. And second, if we own enough, or whatever we own, we are owning junk. Okay, the best of companies in India are already owned by foreigners. और हम लोग बहुत some freedom और अच्छे दिन और ये सब बात करते हैं ना. Previously there was 300 years back, there was one East India company. Now there are more than 50 East India companies. Okay, Prashant's bank is 74% owned by foreigners. It's not an Indian bank anymore. It's not owned by Indians. And his bank's parent company is 78% FII. And few months back in a board meeting they approved that it can be 100% FII. Okay, so we don't own India at all in reality. We will keep saying, you know, like 6 months back what happened? Who cast all the votes? Vote किसने डाला? फायदा किसका हुआ? So we only voted, we didn't actually participate. Now just take this first example. Let us say all of us are in the audience, okay? All of us are in the audience and there is a chairman of a particular bank who's standing here making a presentation. You know, 31st March goes, April, May, they all declare their results, there are analyst meets and investor meets and AGMs and stuff. So let's say all of us are in the audience and a particular bank's chairman comes here and makes a presentation and he tells you that last year was a fantastic year for us. Our net interest margin went up by 0.5%. So instead of 3.5%, now our net interest margin is 4%, and hence our profitability was fantastic. You are sitting in the audience. You understand net interest margin. 30% of our index is banking, and one of the key parameters for banking success is to have a net interest margin which is healthy or increasing. Correct? Now you are in the audience. The bank chairman has just made the statement that last year our profitability went up because net interest margin went up. You are in the audience. If you are a shareholder of the bank, how will you feel? How will you feel? Now flip it around. If you are a depositor of the bank, how will you feel? So in reality, our entire country, we all are depositors. मैंने आपको बोला ना कि शेयर बाजार में हमारा 10 लाख करोड़ का होल्डिंग है. बैंक डिपॉजिट बेस कितना पता है आपको इस कंट्री का? 90 lakh crores, 85 to 90 lakh crores, and it increases 17 to 18% every year. And apart from that, there is PPF, NSE, so many stuff, postal savings, small savings. So what happens is that people in this country do not understand the difference between, they say we have a great economy. But you need to understand the difference between two words in English. We are contributing to our economy. Are we participating in the economy?
No.
The answer is no. There is no point in being very proud of India's growth unless and until you are going to actually participate in it. So the first thing that we need to give our investors is the understanding of how equity works and why they should be in it. The second thing you need to ask, the second and third points are related to each other. You need to be able to ask this to all investors. 2 years back actually, companies like L&T, SBI, not SBI, Shriram Transport and many others, they were issuing these bonds, Tata Capital, right? So 10-year bond for 11% fixed. Now what people need to think is that all these people, are they running their businesses just so that they can pay you 11%?
No.
So if you are a depositor and they have to pay you 11%, what do they need to do?
30% and
Earn more.
They need to earn much more. So when you give money to someone for 10 years at a rate of 11%, what assumptions are you making? You are making few unstated assumptions, but they are implicit. These assumptions are like this, that these are good people, they will not run away with my money. At the end of the tenure, they will give me my principal back. At a prefixed date, they will give me some interest. All this is fixed. तो इतना भरोसा है आपको, तो उसका डिपॉजिट क्यों ले रहे हो, शेयर क्यों नहीं ले रहे हो? इतना आपको भरोसा है कि बहुत अच्छे लोग हैं, 10 साल तक मेरा पैसा लेके भाग नहीं जाएंगे, हर साल 11% देंगे, 10 साल खत्म होने पे मेरा असल भी लौटाएंगे, right? So if you are a depositor or a equity holder, आपके मन में उस कंपनी के प्रति उतनी श्रद्धा होनी चाहिए, और अगर इतनी श्रद्धा है तो अपना रिटर्न 11% तक सीमित क्यों कर दिया आपने? If you have so much faith in the company, then you should be willing to say, okay, I think there is potential in your business, and if you are going to make 25-30% return on equity, return on capital invested, then I don't want to restrict my upside to 10%. I would rather participate in the entire gain. Correct? So why is it that we are willing to lend money to someone for 10 years? You might rather as well buy their stock. Because if they don't survive and if the stock doesn't make return, then anyway the bondholder will also not get anything. Correct? Now if you studied accounts in FYJC, they teach you some basic rules of accounting. There is a simple rule which says that when you prepare the accounts, it's a going concern. You have to assume it's a going concern. If I make a statement that for a going concern, equity will always give higher return than debt, is it true or false?
True.
See, it's so easy. Actually, you know, it's logical. It's very logical. You need to understand that if an entrepreneur or an equity holder or a shareholder is not going to get more return than his lenders, why should he be in the business? So if there is no equity holder or no entrepreneur or no shareholder, then there is no business, and then there is no finance, and then why do we need lenders? Why do you need lenders if there is no entrepreneur who's interested in running a business? You don't need it. Correct? So the whole point is that if equity does not give returns, then debt will also not give returns. You don't need debt unless and until there is an equity holder who is willing to take that debt, put it to productive use, and generate returns for himself first, and only then that lender is going to get something out of it. Okay? These are few very simple examples. You don't need to get lost in the charts and graphs. You just look at the numbers which are circled. Basically, what these charts show you is that in the short term there are very many things which happen, but in the long term, ultimately the share price changes as much as the earnings have grown. So this is an example of ITC. What it shows is that in 10 years, the net profit has grown 18% compounded, and the market value of ITC has grown 27% compounded. You know, sometimes what happens is, at the starting point, if the stock is very undervalued, and at the ending point, the valuation has actually expanded, then you get this kind of number. But there are not many examples of stocks, but see what it's showing. TCS 27% earning growth, 22% market cap growth. Unilever 11.9% earning growth, 15% market growth. Reliance Industries 15% earning growth, 15% market cap growth. And finally the Nifty, 13% growth in Nifty earnings, 14% is the CAGR of Nifty. Okay, so in these 10 years, we've had BJP government, then we had Congress with left, then we had Congress with Trinamool, and we are back to BJP. Right? In these 10 years, you had a global financial crisis and you had terrorist attacks. In these 10 years, India won some 2 or 3 World Cups. It has nothing to do with the stock market, I'm just confusing you. The last point is the most important. Kai baar, you know, like yesterday, day before yesterday, day before yesterday evening, I was talking to a lot of clients in Hyderabad. 14% दिया है, क्या बड़ा हो गया 14%? 14% is okay. I mean, we thought that, you know, so this is just Nifty. And for 10 years, if your money compounds at 14%, 1 crore becomes nearly 4 crores. So this gentleman was saying, अच्छा लेकिन 10% deposit में मिलता है तो 3-4% के लिए क्यों equity में डालने? So I asked him a very basic question. I said, sir, if you are boarding a flight from Delhi, you know, as soon as the flight takes off, they put it on autopilot. They just set the direction and it's on autopilot. Okay. So as soon as a flight takes off from Delhi, let's say you are flying to Rajkot, okay, and the pilot or co-pilot, he sets the direction wrong by say 2 or 3 degrees. What will happen to you? अहमदाबाद आया तो क्या हो जाएगा? You land in Karachi. And And you cannot land, you will be shot down actually. You will be brought down unceremoniously. So what people don't realize is that over a 20-year period, 1% is a difference between a prince and a pauper. It's a dramatic difference. It's dramatic difference. And by the way, all the mutual funds that we speak about, like we are running a portfolio management service, we run a large cap PMS. This is showing 14%, we've delivered 29%. And you gave example of HDFC equity, they all have given 28, 29%. All the best products in the industry. So here what 1 crore has become 4 crore, in all the best products in the industry, 1 crore has become 12 or 13 crores. And if you were in a deposit, then 10 years back you would have been driving a Honda City, today also you would have been driving Honda City. Because you maintain your standard of living. Amazing. So why are we investing in equity? That needs to be clear. That's why I said Warren Buffett doesn't do financial planning. Okay, and it's not that when he started, he didn't need it. Correct? What you need to understand is that there are a lot of times that people are presenting equity. See, look, if the financial goal is 18 months, 24 months, 36 months away, you can't talk like how I'm talking. But generally people are investing for 20 years, 25 years. By the time you cross 35, see, in my personal life, what I've seen is that after I crossed 35, I didn't have too many goals left. The next goal is 55. Okay? Nowadays, kids do court marriage. So I don't have kids anyway, but I'm just saying. So when I cross 35, I realize my next goal is 55 or maybe 60. So if somebody tells me, sir, balance fund में डाल दो, sir, इतना पैसा debt में डालो, इतना पैसा equity में डालो, फिर ये हो जाएगा. I recently met a guy who has 1,000 crores and he has his own family office. And he had a guy who was some major MBA with chemical engineering and all. He had all the degrees and everything. He was managing that gentleman's money. He came with me and said that 1,000 crore treasury I'm managing. So I'm putting this much in real estate. I'm doing this. I'm doing that. मैं अमेरिका में ऐसा कर रहा हूँ. मैं स्विट्जरलैंड में कर रहा हूँ. पूरा उसका मैंने बात सुन लिया. Then I told him कि तेरे को एक चीज पता है कि नहीं पता है कि तू 1,000 करोड़ का निफ्टी खरीदेगा ना तो तेरे को 25 करोड़ रुपए साल का डिविडेंड मिलेगा. It's simple. You don't need so much planning, boss. If your goal is 20 years away, how much can you plan? Correct? If he had bought 1,000 crores worth of Nifty, he could get 25 crores of dividend. Then what is the planning for? So people who we meet don't have 1,000 crores, they have few lakhs. What I'm trying to explain to you is that if your goal is 20 years away, then you cannot complicate it too much. You just have to buy equity and go to sleep. Okay? So what happens is that everybody will send you that goal, कि boss Wipro अगर 10,000 रुपए का खरीदते तो आज 600 करोड़ हो जाता. ऐसा सब लोग religiously WhatsApp और Facebook में religiously forward करते हैं. I even get updated कि नहीं पिछली बार 400 था अभी 500 हो गया. And if somebody doesn't even send it to you, then suddenly the newspaper says that Mr. Premji has donated 20,000 more crores. So you realize अच्छा वो 10,000 वाले का और बढ़ गया रहेगा. इस केस में और 20,000 करोड़ देने. Correct? So what happens is that everybody forwards the message. Now a lot of times I think that I should go back home and I should ask my father that in 1980 you didn't have 10,000 rupees. I can ask. How many of you asked that to your father? देखो अगर अपने बाप को पूछने का हिम्मत नहीं है ना तो कम से कम तुम्हारा बेटा या बेटी जरूर पूछेगा उसका If I ask that to my father, he will say, boss देखो मेरा बॉस रामदेव अग्रवाल नहीं था तुम्हारा बॉस है. 1980 में CNBC और इकोनॉमिक टाइम्स नहीं था. तुम्हारे जैसे लोग घूमते घूमते भाषण भी नहीं देते थे. इकोनॉमिक टाइम्स भी कोई नहीं खरीदता था. So he can give me, and actually the poor guy will say I didn't have 10,000 rupees, which is also reality. Yes. Correct. Now my point is that what will you do if your son or daughter asks you after 20 years? What do you say? I was forwarding the emails, I never read it. Correct. So one of the biggest mysteries in the financial world is this. Just read it. It's the biggest mystery. In the investing world, everybody venerates or worships Warren Buffett. But how completely people ignore his advice. Correct? You know why we have made our mission why it says buy right, sit tight? Because our observation is, and I'm not trying to sell you my fund, it is relevant for equity in general. Our observation is that when people buy right, they book profits. And when people make a mistake, they become long-term investors. Every time that somebody buys a stock for 100 rupees or a mutual fund for 100 rupees, they will come and say, "Abhi 100 ka 150 ho gaya." They will say, "Acha, abhi profit book kar dete, chalo paisa le lo." You cannot create wealth by selling. You cannot, because ऐसा नहीं कि किसी ने कभी विप्रो नहीं खरीदा है. बहुत लोगों ने बहुत सारा विप्रो का शेयर खरीदा है. But the moment it appreciates, people sell and take the profit. You do not create wealth by booking profits. Wealth can never be created by booking profits. Wealth can only be created if you allow those profits to run and if you allow that profit to compound. Okay? So we firmly believe that if you buy right, you should sit tight. And if you make a mistake, then you should reevaluate your position and cut your losses. But most investors, they do a very, very confounding thing, which is that when they make profits, they actually book profit. And when they make a loss, they actually
never book.
They hold it.
They become long-term investors.
They never book.
Sorry, nobody sells at a loss. And that is why if you see, few minutes back, this is the last point, we'll close the presentation. Few minutes back I told you that FIIs have a higher holding in the Nifty companies and lower holding. And retail investors, you know why retail investors have a high holding in poor quality companies? What is the reason? One is they don't sell, but it has got to do with the buying. Because what will happen is, if you tell an investor that, see, 5 रुपए का एक स्टॉक है और एक स्टॉक 15,000 रुपए का है. The biggest problem with the stock market is that everybody says 100 times you have read textbooks which say that price is what you pay, value is what you get. Have you heard this?
Yes.
But if one stock is available for 5 rupees and another stock is available for 15,000 rupees, how do you decide where is the price and where is the value? So people have a tendency that they are more than happy to buy something for 5 rupees, but they will not buy something which is available at 15,000 rupees. So they are very happy to buy Suzlon at 5 rupees. Never made a profit in I don't know how many years. But they will not buy Eicher Motors for 15,000 rupees because the price is 15,000. So unfortunately in the stock market what is happening is that the way we buy shampoo is exactly the way we are buying shares. Because FMCG companies have taught you that we will sell shampoo in sachets. It's good if you want to buy in lower denomination, it's good if you want to travel. But that's not the way to buy stocks. Because in the stock market, more often than not, what is happening is that something which is trading cheap is trading cheap because it deserves to be cheap. And sometimes what is expensive because quality comes at a premium. And local investors prefer to buy something which is cheap. Whereas institutional investors have always preferred to buy something which has better track record and even if it is slightly at a premium. Also keep in mind that if you buy a low quality stock at a high price, then you're doomed. But by mistake also if you buy a high quality stock at a high price, then ultimately the worst that will happen to you is that 1 or 2 years you will hold on to it. But ultimately the earnings will justify the price. Right? So these are few ideas that I wanted to share with you. Thank you very much for listening me out and I hope you have a good session.
Thank you, Aashish, for this realization about equity investing. Thank you. So now, taking this kind of discussions further, we have Mr. Nilesh Sathe, the CEO from LIC. Mr. Sathe has around 30 years of enriching and valuable experience in LIC of India. He has been a very dynamic person and has a very successful career with LIC of India. Mr. Sathe joined LIC Nomura Mutual Fund in the year 2012 and added a lot of focus and expertise in the LIC Nomura Mutual Fund to guide and take it to the next level, and in both in terms of their standing and business in the industry to the new heights. He has been a very important person in LIC of India system. He has been instrumental to direct many people in organization and also to LIC agents